$300. That's how much you get to contribute to any charity of your choice, and you get to deduct it off your tax return this year, even if you don't itemize. Do not miss this deduction. Welcome to Financially Intact, the channel that helps you keep your money in your pockets. Let me show you exactly how this $300 deduction is going to work for you. So we're showing you here how you're going to be able to claim that $300 charitable deduction. We're also going to tell you today about the stimulus payments, whether or not they're taxable, and what to do if you did not get yours. And we're going to talk a little bit about the new IRA rules, because these are all tax-related issues related to 2020 here. So as you can see here, this is a rough draft of the new forms that are coming out. The IRS tells you don't use these. These are just a rough draft, but I was able to go find this. And so you can see down here on line 10B, it says charitable contributions if you take the standard deduction. And so that's going to go right here on this line, and that can go up to $300. Now they did make another part of the ruling that said if you want to give a lot more of your money, you can give away up to 100% of your income this year. You would have to itemize in that case. Normally they only let you deduct up to 60% of your income as a deduction. This year they're going to allow 100% as a deduction. So if you're in that 22% tax bracket and you gave away $300 to your church, to scouts, to anybody, it doesn't matter who you gave it to, so long as they are a recognized charity, you get to take this deduction. And like I said, if you're in 22% tax bracket, that's $66 that we get to put back into your pocket, which is exactly where it belongs. So that's the first one that we wanted to show you, was the charitable deduction. Second one we want to talk about is the stimulus payments. First and foremost, many people have asked me this over the course of the year. It is not taxable income to you. And some people still haven't gotten theirs payments as far as that's concerned. So if you go into the IRS website, they're telling us here that they are going to give us a way of getting it by filing a tax return for those who did not get it. Now, finding it was a little bit tricky, because what they call it here is the recovery rebate credit. I'll actually show that to you back on the forms. If you go to the second page here, it is here on line 30. They call it the recovery rebate credit. Of course, that's not the way we would normally look it up, because we thought it was called the stimulus payment. So it is called the recovery rebate credit, but it's also known as the economic impact payment. So all three of those terms are totally interchangeable. It is not three different programs. It's all one and the same program. So going back to here, they're telling you that if you did not get your full $1,200 per adult and $500 per child, you will have to find your form 1044. Notice 1444, sorry. Notice 1444, it will tell you how much you did get, and then you can go and work through the worksheet to see if you should be getting more. Now, if you know you got your full amount, your $1,000, your $1,200 per adult and $500 per kid, you don't have to go through this computation at all. It's only a worksheet. It's not a form inside your tax return. You only do the worksheet if you didn't get your money, or you think you should have gotten more, then you might want to go through and work that out. So that was the second part that we wanted to tell you about. Then the third part that's having a really big impact on people is the rules to the IRAs and all the changes there. So let's talk about that for just a moment here. So now we're going to talk about, just for a couple of minutes, about the new IRA rules that took effect in 2020. A couple months ago, I did a fairly in-depth presentation about the IRA rule changes. So we're going to go over it just briefly here so that you know that they exist, in case you haven't seen that other video yet, and you can take advantage of some of these rules for yourself. So there were actually two rule changes here in 2020. So the first one had to do with what was called the Secure Act. That was the great big tax law that they passed a little while ago. They passed on 12/20 of 2019. And what it said is that It used to be once you turned 70 and a half, you had to start taking money out of your IRAs. You had to start taking those required minimum distributions. Well, what they did is they changed that to age 72 for us so that we start taking out our money a little later on instead of so early on. And that was a nice change. Now, later on in this year, because of COVID-19, we ended up with another ruling called the CARES Act. And inside the CARES Act, it said for 2020, we do not have to take distributions at all if we don't want to. If you already took a distribution this year and you decided that you really don't want to do that and it's going to cause you extra taxation, so long as you're within the 60 days of when you took it out, you can put that money back in and it will not count against you as a distribution or a taxable event. So once again, in 2020, you don't have to take it at all. After this, you start doing your required minimum distributions at age 72. Now the other thing that they changed, and this was pretty neat, was that if you're still working, you can contribute at any age. It used to be once you hit age 70, in the year you turned age 70, you can no longer put money into IRA accounts, either traditional or Roth. Well, it still sticks that you can't put it into a Roth IRA, but you can put it into the traditional. The traditional is the one where you get to deduct it now, but when the money comes out, it is taxable. We are going to do another video on it about traditional and Roth IRAs and actually show you ways that you can get money out of traditional IRAs tax-free. But that's another video, and we'll cover that the next time around. So there you have it for today. We talked about the $300 charitable deduction that you get to take without having to itemize. We talked about the stimulus payments. If you didn't get all of yours, how you can get it through your tax return, or if you didn't get one at all, you can get it. And now you know that the stimulus payments that you did get are not taxable. You don't have to pay taxes on that money. And we talked a little bit here about the new IRA rules. If you like what we do, please like and subscribe to the channel. Please leave comments below, or questions, especially if you have any questions or you think I didn't cover something quite clearly, let me know, and I'll definitely get back to you on that. We appreciate all the comments. So until then, hope everyone stays healthy, and we'll talk to you again soon.